selling put options on dividend stocks is the topic of this video, ladies, gentlemen, any pronouns you prefer. We're talking about selling put options on dividend stocks. It's not financial advice, though. It's general financial education. You got to do what you got to do to figure out if it's suited for you. You got to do what you got to do to figure out if it's suited for you. Now, being a professional musician is not suited for me, but I can at least have a little fun, right? So we covered that one. Another thing we got to cover, practice with paper trades. The reason why you want to practice with paper trades is because if you are making a mistake, you won't be losing real money. That's the best thing to do, is not lose real money. Boom! Look at that right there. Right there at the 1 minute mark. A link to a video popped up. And that video is going to be about the unfair advantages of selling cash secured put options on stocks you'd be happy to own. You thought that was all I had for you? No! I've got one more thing that's going to be at the 1 minute and 30-second mark. It's going to be popping up right there. And it's this playlist right here. Get ready. It's coming up in 5 seconds. With this playlist, you will be able to get a good idea. There it was. Get a good idea about how to get set up with this so you can start paper trading and practicing. Because look, here's the reality. 2023 and beyond, if you got an internet connection, if you have an internet connection, a bank account, and you spend money at least once a year, then you have no legitimate reason not to be selling cash secured put options on stocks you'd be happy to own. You can get some downloads, help you figure out stuff. You got the YouTube playlist here, all those other YouTube things that are over there. Free stuff, paid stuff, whatever stuff you want. Let's just get into talking about selling put options on dividend producing stocks. There's a number of ways you can scan for dividend producing stocks. This video isn't going to go into a lot of detail about scanning for those, although the playlist, I believe there's a video on there that does. And in these one or two of these downloads give you some something you can't really scan for, but some things to be aware of when it comes to selecting stocks. So play with those if you need to. But what I love is I love having dividend producing stocks in my portfolio. Now this is a paper trading portfolio. I don't think I have any dividend producing stocks in here. But in my real accounts, one account is just totally 100% dedicated to dividend producing stocks. I have another account that I have dividend producing stocks in there, and I also do other things. And I've got an account that I just trade futures with, and I might have another account or whatever. So sometimes it's useful to have multiple accounts. But let's say you just have one account. Kind of keep it simple in the beginning. Now there's ways to scan for dividend producing stocks. Now some of these dividend producing stocks, they're not going to be the greatest stocks to be doing the wheel strategy. If you don't know what the wheel strategy is, you got to watch this playlist. So some stocks I like to own them even though they have low liquidity, and they the option chain, you'll see there's hardly any contracts being sold on the option chain. There's barely any strike prices, and it just makes them not really suitable for straight up option trading. But these stocks, and they can have really low debt. It's one thing that I'll look for, and high dividends, also with a low dividend payout ratio. So there's a variety of things of these different stocks that they're just really not that popular stocks, and but they're fundamentally sound. Good fundamentally sound stocks that I think are going to be around for a long time. They got really healthy balance sheets. They're really profitable. Even though they're paying out good dividends, they're not It's not an alarming type of percentage of payout. It's a payout that they could theoretically, seemingly, easily be able to keep into the future. So what I'll do a couple things on those type of stocks. And it doesn't mean I do this on every single stock. I might do it on all of these different things on some, or I might pick and choose. It just really kind of depends on the situation. Like, even though sometimes I'll do some mechanical trading, I'm a lot more fluid when I'm looking at my overall portfolio and figuring out what to do. So another reason why I like to have dividend producing stocks in a portfolio that I'm also doing different option trades with is because the one thing that it does is it brings in more money, right? Every quarter, month, there's going to be more money coming in, right? And then the stock might fluctuate up and down, but it's going to bring in more money. And then just having the stock is good for the old buying power. And it's an asset. So I like it to be sitting there. So one thing that I might do, depending on the price of the stock, and let's say I use some sort of scanning thing, whether it's through here or through Finbox or Yahoo Finance, some way I'm scanning for stocks that I personally like. A really low amount of debt. What is that? You're going to have to do some research and figure out what's low for you. But a low amount of debt, a low according to that industry type, a dividend payout ratio, but maybe like paying a dividend of like over 5. Sometimes I'm able to get them over 5, and sometimes when people say, oh, if the dividend's too high, it's a red flag. It could be, depending on the industry. But you know what can also happen? What if the amount that the stock's paying out is not an absurd amount, but the stock price dips down for some reason? When the stock price goes down, if you buy at this lower price, when you purchase at that price, the yield goes up. So maybe let's say if the stock normally trades around $20 and trading around $20, somewhere between 20 to 30, maybe the dividend yield is like, let's say, 3%. And then there is some point as the stock price goes down in value, that dividend starts going up from 3% to 3.01%, and eventually, if the stock goes down enough, you can purchase at like a higher percentage, whatever higher number that is. Okay, so do some extra research if you want to learn a little more about that. So one thing that I might do, once I find a stock that I want to start taking ownership of, I will I'll go through and I'll just take a look at that stock through all these different things, right? So if it's my very, very first time looking at the stock, I'll probably start right here really quickly. Okay, I'll take a look at what's it been doing for the last day, right? I'll just real quick go through there. And then this is 2 days, 15 minutes. And get to the hourly chart. I'm like, all right, that's very short term. This is really what I want to get to here. All right, now I'm looking at 6 months, 1 day. Then I'll take a look, over the year at 1 day. Then I'll be taking a look at weekly chart for about 5 years. I'll take a look at the monthly chart. And then I'll look at all these different moving averages put on one spot. And then cone of probability, I'm really not doing too much with until it comes time to selling options. Then I'll start looking at this, get an idea of where the stock is currently trading, looking at the volume profile. You notice it's the same stock. This timeline is 1 year, 1 day. Now let's look at a 5-year time period. Let's get a different picture. All right, and then 10 years, got a different picture. 10 years and on a monthly chart. So then once I get an idea of kind of where the stock is in relationship to where it's been in the past, what it's looking like, one thing I might do is I might just go into the market and I might just buy some shares. right? So if we're looking at XLU, I might just quickly pop in, and maybe I want whatever number of shares, right? Whatever the number that is. Maybe I'll do that. 25 shares, whatever. A lot of times I'm trying to keep it in increments of 100, so that way I can, if needed, I can buy put options on it, and also so I can sell covered calls against it. So let's say I go in and buy 100 shares. All right, now I have 100 shares. Boop, go over here. Hey, look at this. Here's my 100 shares. And then when the dividends come in, I might turn on a feature of a dividend reinvestment thing. And that I don't think for TD Ameritrade, I do it through. I don't do it through Thinkorswim. I do it through the TD Ameritrade website, my account over there. So then every dividend payment, the dividends are reinvested into buying just a few more shares, and then maybe I'll sell a covered call against this, and then I'll take that. I might take that premium that I received from the covered call, and I might buy another share, and then maybe I sell. Now I got let's say I got, whatever. We'll pretend that this is actually what I just bought. 100 shares at $68. Maybe I sell. Let's go with this. Just look at the 6 months. Maybe I sell down here at 64. Let's do that. Let's take a look. And we got a position on here. What do we got? Is it a covered call? Sure enough. Oh yeah, I remember what happened. Anyways, so let's say 64. Boom. Okay. The highest it got last Friday was around 19. So let's take a look at selling one of those. I'm going to put it up here to 20. See if we can get filled at 20. Turn this over here. So if I got filled at $20, then $20 is not enough to buy one share of XLU. So I might not do it. I might use it in conjunction with money I have in my account just to buy one more share. I might wait until I've brought in enough from premium to buy one more. You know, there's a variety of things that I could do. What I'm definitely not doing is I'm not trying to really put a lot of effort into monitoring. So what I'm trying to do is I'm selecting stocks that I won't really have to monitor a whole lot. And I'm doing option trades on them that I really wouldn't have to monitor a whole lot. So for example, right here, I bought this one at 68. I got a covered call against it at 70. It's got 18 days left to expiration. And so I guess here I got filled at 26 bucks. If I got filled over here at another 20, that puts me at 46. Still not enough to buy one more share, but I might do something like that. And then if the stock price, let's say it dips down over like the course of sometime it dips down, but it doesn't dip down to my 64. Let's say it dips down to like 66. I might just buy some more shares, or I might do something like this. Let's say, whatever. Pretend this number is relevant to that chart we were looking at. This is just showing us where at the money is. So I might sell a at the money option for a very short amount of time, 4 days. 11 days, and if I'm comfortable buying at this price, I'll sell it. You know, it's a little bit of a gamble. Hey, it's a gamble that I win no matter what, because if it stays above my strike price, I'll just take this premium and maybe add it with the other premium and buy another share, or I take on a total of 100 more shares, or how many ever contracts I sell, but 100 shares per contract. I might take on more and just continue to build up this stock position. A lot of times, for me, when I'm looking at the dividends, is what I like to do with dividends is I like to do something kind of like this. Like in Hawaii, we have car registration that you have to pay every year. Mine's about $350 with the car I'm currently driving. So let's say we've got a stock that's paying to make life really easy. Let's say it's paying $1 a year. So that means if I had 365 shares before tax, it's giving me, in a 1-year time frame, it's giving me this $350 to pay my car registration, which happens to be in December, right? It's kind of towards the end of the year. Now maybe it takes almost a year to get this set up, because if I bought let's say 500 shares right on December, I'm not getting paid $350 right in December. So the next year, when I going into the next year, I could start taking those dividend payments, put them aside, and then use that money to pay my car registration. And then we also have a safety check. That's $20. That is 20. And maybe there's going to be some whatever other annual maintenance. So I like to, when I'm doing this with stocks, I have a tendency to try to get around, keep them in the increments of like 500 shares or 1,000 shares. Usually 500, 1,000 shares, it can pay a pretty good chunk of dividends throughout the year to be able to pay annual bills with, or to be able to, repurchase more stock, or just, fund the account. And then it's an asset that's given me income that I can sell covered calls against. And then also, even though if the stock price goes down quite a bit, it can start negatively affecting the buying power. But overall, I don't really find that happening a whole lot. I can't say it's never happened to me before, but I find that it being more of a benefit, that when I have a decent amount of like, I don't know, 5 to 7, maybe more, but like 5 to 7 different dividend producing stocks that I'm slowly accumulating more and more and more of, it just has this nice snowball effect. And then what I'll do is that helps bring more money in, and helps kind of with just having buying power to do different option trades that are going to require buying power. So there's a lot of different ways that you can approach this, and I would suggest taking a look at it and figuring out what can work well with your life, how your life is structured, what can work well with you, what size of account you have, possibly like age can have a factor into it also. Maybe you don't want to do the dividend reinvestment thing because of your age and your situation, or maybe you do, or maybe you're at an age where you're not really going to like get a great amount of compounding, but at the same time you're willing to do it because you want more shares, and it's something that you can do. So there's a lot of different ways you can do it. And just like anything in the stock market, there's so many different ways you can do it. That's why I love the stock market, because however your life is, you can find a way to make the stock market benefit you. You're going to have to do some learning. You're going to have to do some thinking, and you're going to have to do some experimentation. More than likely, if you're just looking for someone to tell you exactly what you can do, you might be able to buy a course that on the first time you buy one, they have some sort of mechanical trade set up and it just works perfectly for you. Or you might have to buy several until you find something that clicks well. Or a combination of everything, right? That's kind of how it's been for me, is buying a lot of courses and continuing to learn and practice. And it's still an evolution that I'm going through, and it's a wonderful, wonderful thing. It's so wonderful that I feel very strongly to tell every human being that I believe if you have an internet connection, a bank account, and you spend money at least once a year, you have no legitimate reason not to be selling cash secured put options on stocks you'd be happy to own. There's a variety of good things that can come to you besides making money. Hey, I wish you all the success. I'm going to spend the rest of my Sunday night taking care of some stuff. You guys have a fantastic day, whatever day you're watching this, and let's go for more than that. Let's just not have fantastic days. Let's live fantastic lives. Aloha.